Imagine waking up as 20% of the world's oil supply simply vanishes because a 30-mile stretch of water is now a naval fortress. The peace talks are the only thing standing between a global recovery and a multi-year stagflationary depression, starting this April 22nd. This is the ultimate black swan, and today we'll see where the smart money is flowing during this historic energy reset. We are deep diving into the 3 to 5 year oil infrastructure rebuild, soaring nuclear demand, and the best uranium plays for your portfolio. I'll identify specific Australian and American exchange-traded funds and companies positioned for this massive structural shift into clean baseload power. Disclaimer: this is for entertainment only. The market's having a bit of a wobbler, and you must do your own research. Is nuclear energy our only hope to survive the death of the petrodollar, or is the global economy fundamentally broken? Tell the Gain Squad your strategy below, hit like and subscribe, and let's get into why this is a proper golden entry. On April 20th, 2026, energy markets went into cardiac arrest as the Strait of Hormuz saw commercial traffic drop to zero. This isn't a temporary glitch. It's the largest supply disruption in history, echoing the 1970s crisis with modern supply chain complexity. Precision strikes on Qatar's Ras Laffan natural gas complex have knocked out 17% of their total capacity. Experts confirm these specialised LNG trains will take 3 to 5 years to rebuild, leaving a permanent hole in supply. Smart money should note that global inventory draws have reached 5.1 million barrels every single day this month. Brent crude has rocketed toward $115, while retail diesel in the States hit $5.80. In Australia, we are feeling the petrodollar trade as the US dollar and crude oil correlation hits 4-year highs. The materials price index is forecast to peak 25% higher than pre-war estimates, making domestic manufacturing look like a dog's breakfast. Families are being squeezed as retail gasoline averages $4.30, forcing a massive reduction in discretionary spending. By April 21st, the focus shifted to Islamabad, where the US delegation is struggling to secure a lasting ceasefire. We are seeing a strategic scarcity mindset driving capital away from traditional tech and into hard energy assets. Rebuilding these facilities requires specialised turbines with backlogs of up to 4 years, making a quick fix impossible. This infrastructure crisis is a new paradigm shift, forcing every nation to prioritise energy sovereignty over the lowest cost. The world is pivoting to nuclear, with the IAEA doubling its global capacity projections for the 4th straight year. China is leading the charge with 112 units, either operating, under construction, or newly approved. In 2026 alone, China will commission 7 new units, adding 5 million kilowatts to their massive power grid. Tech giants are undercutting the market, signing massive deals to power AI data centers with 24/7 carbon-free energy. Constellation Energy's 20-year deal with Microsoft to restart 3 Mile Island has sent shockwaves through the entire utility sector. Let's optimize this entry by looking at the uranium miners, which are the essential pick and axe play for this renaissance. Cameco is the sector's blue chip name, with a 25% year-to-date gain and strategic assets in Canada. The global uranium production deficit was £31 million last year, and that gap is only widening further. Supply is further constrained by sulfuric acid shortages in Kazakhstan, which is threatening 40% of global output. Australia is on a good wicket here, holding 28% of the world's uranium and looking for secure export partners. The ASX-listed Paladin Energy is up 46% this year as it ramps up the Langer Heinrich mine. Boss Energy reported record production from its South Australian mine, despite some recent heavy rains causing a minor guidance trim. Deep Yellow is nearing a final investment decision for its project in Namibia, positioning itself as a major new producer. For gold getters seeking broad exposure, the Global X Uranium ETF, ticker ATOM, on the ASX is a top choice. Another solid option is the VanEck Uranium and Energy Innovation ETF, trading under the ticker URAN. These funds provide access to miners, equipment manufacturers, and the infrastructure needed for the next generation of power. Small modular reactors are the next frontier, as they can be factory assembled to speed up deployment significantly. GE Vernova is the clear leader in SMR technology, with its stock tripling over the past 52 weeks. Even Kazatomprom, the world's largest producer, is focusing on discipline as the market faces a massive structural shortfall. On the technical side, gold is battling to hold support at $4,780. Gold prices pulled back on April 20th as the US dollar moved firmer and Treasury yields rose. Technically, the 4-hour chart is neutral, with price holding just above the 200-period moving average. The relative strength index is hovering around 51, suggesting range-bound conditions before the next major breakout. Analysts at Goldman Sachs have raised their gold price targets to $5,400 by year-end. Crude oil futures remain volatile, with Brent trading near $99 as the Islamabad talks hit a snag. Brent is currently the better trading vehicle for the gain squad due to its direct exposure to the blockade. The Australian dollar has rallied 20% from its lows, acting as a liquid commodity currency for global investors. Uranium spot prices remain stable at $85 per pound, supported by a massive fundamental floor from tech investments. Uranium Energy Corp shows a strong buy outlook, with its 50-day moving average providing a clear technical signal. Traders, the golden entry here is accumulating quality names while the broader market has a bit of a wobbler. We are witnessing a realignment where secure, state-managed nuclear grids are replacing fragile oil and gas pipelines. The US government is fast-tracking uranium permits in Wyoming, signaling that domestic supply is now a matter of national security. If the Islamabad talks fail on April 22nd, expect gold and oil to gap significantly higher on the open. Even a ceasefire won't fix the 3 to 5 year rebuild timeline for the destroyed Qatari and Iranian gas infrastructure. This means the structural demand for nuclear is essentially locked in for the remainder of the decade. Let's optimize this entry by checking the Global X Copper Miners ETF ticker WIRE on the ASX. Copper is the nervous system of this transition, rising 14% this year as grid expansion accelerates globally. Smart money is also moving into the VanEck Gold Miners ETF for unhedged exposure to the world's biggest producers. GDX includes local champions like Northern Star and Evolution Mining, providing stability during these high volatility sessions. For tech-focused traders, Vistra Corp operates the second largest nuclear fleet and is cutting deals with AI data centers. These companies are the magnificent seven of the new energy era, and they are where the smart money is flowing. Remember, the biggest gains are made by those who can handle the hard yakka of holding during scary headlines. Whether it's the blockade or the long-term reconstruction, the energy market is undergoing a fundamental and permanent reset. Nuclear isn't just an alternative, it's the only baseload solution that meets the massive energy needs of the future. As we approach the Islamabad deadline, keep your positions tight and focus on these high-conviction energy plays. The petrodollar system is under pressure, and hard assets are the ultimate hedge against this level of geopolitical instability. April 22nd will be a decisive day for the global economy. Be ready for the volatility, gold getters. This isn't just about a trade. It's about positioning for a world where energy security is the top priority. Make sure you've got your ducks in a row with these uranium and copper plays before the next leg up. The technicals for Cameco and PDN are flashing strong buy signals, even as the broader indices look shaky. Don't be pulled by a swiftie from short-term news. The long-term supply deficit is your greatest friend. We'll be watching the gas stations and the spot markets like a hawk as the ceasefire clock ticks down. The risk of a longer-lasting disruption is growing every day that the Strait of Hormuz remains under strict control. If the war extends through the summer, some analysts predict oil could hit $200 per barrel. That would mean retail gasoline hitting $7 per gallon, an absolutely mental scenario for the global consumer. Smart money is already hedging for this outcome, rotating heavily into the energy transition metals sector. This is why we are heaps keen on companies like Boss Energy and Paladin during this consolidation phase. The supply of nuclear energy is forecast to soar beginning this year, underwritten by both governments and big tech. It's time to circle back to your core portfolio and ensure you're not overexposed to energy-dependent sectors. The Islamabad negotiations are being handled with extreme caution, as any misstep could ignite a wider conflict. Gold getters, this is the most significant energy security challenge in history, and the window for entry is closing. Keep a close eye on the Aussie dollar pair, which is currently testing make-or-break resistance at 71 cents. A breakout here would signal a massive vote of confidence in Australia's resource-heavy economy during this crisis. The technical outlook for gold remains constructive as long as it holds above $4,700. Uranium's $85 spot price is a floor, not a ceiling, given the massive production deficits ahead. We are looking for a proper golden entry in the mid-cap producers like Bannerman and Deep Yellow. These companies provide the highest leverage to the uranium price as their projects move toward first production. For those in the big smoke, these thematic ETFs offer a simple way to diversify without the stress. The AI era is a power-hungry beast, and it has chosen nuclear as its primary fuel source for the future. This convergence of AI and energy is the most powerful investment theme of 2026. Let's see how the smart money is moving into the infrastructure companies rebuilding the Gulf. Companies like Jacobs Engineering are sitting on a good wicket as they secure multi-billion-dollar repair contracts. Even if the war ends, the inflationary impact of this disruption will take years to fully unwind. This sticky inflation is why hard money assets like gold and silver are performing so strongly. Silver's dual role as an industrial and monetary metal makes it a standout performer. Gold getters, don't let the short-term volatility shake you out of a generational bull market in commodities. The market's having a bit of a wobbler, but the fundamentals for uranium have never been stronger. Stay across the news from Pakistan tomorrow. It will define the next 6 months of market direction. If the bombs start falling again, the safe haven trade will become the only game in town. But the innovation play in nuclear and copper is where the true long-term wealth will be built. Make sure you're using the latest technical indicators to optimize your entry into these energy names. The 50-day moving average for UEC is a key level to watch for a potential trend continuation. For Paladin, keep an eye on the 200-day average to confirm the long-term bull thesis is intact. This is the smart, boring data of trading staying focused and disciplined while everyone else is panicking. We've given you the list of tickers and ETFs. Now it's up to you to perform your due diligence. The energy reset of 2026 is a historic event that will be studied for decades. Don't miss your chance to be on the right side of this massive capital rotation into hard assets. Whether it's physical gold or the uranium miners, the smart money is positioning for a high energy cost future. The Islamabad deadline is nearly here. Make sure your portfolio is ready for whatever comes next. Keep your head in the game, and don't let the noise distract you from the clear structural trends. This video has covered the blockade, the infrastructure damage, and the best ways to play the nuclear renaissance. We are heaps keen to see how these trades play out as the global energy mix continues to shift. Remember, in a world of scarcity, the ones who control the energy are the ones who win. To wrap up, the April energy shock has caused a massive supply deficit that will take at least 3 to 5 years to fix. Crude oil peaked at $115, while gold remains resilient near $4,800. Nuclear demand is soaring, underwritten by big tech data centres and a historic shift in global energy policy. Australian resource companies like Paladin and Boss Energy are on a good wicket with 28% of global uranium. Technical analysis shows strong buy signals for key energy ETFs like ATOM and URAN during this consolidation. The Aussie dollar pair's rally highlights our role as a secure energy exporter in a volatile global market. The Islamabad ceasefire deadline of April 22nd is the key pivot point for every gold getter this week. Traders, if the Strait stays closed for the rest of the year, is your portfolio actually protected? Tell the Gain Squad your take on the multi-year rebuild. Do you think the world can pivot fast enough? Like and subscribe to Goldie Gains to optimize your entry every time the market has a wobbler. Keep your positions tight and gains golden. I'll see you at the next close. Cheers!